Hello Mavericks, it is Rob again. Welcome to Currency 101, Module 3, and we're going to be talking about time frame. Okay, before we go any further, I want to talk about time frame. Time frame is a very interesting thing in trading because in our world we live life in binary terms. Something is right or wrong. Well, the problem is that doesn't really work when looking at and analyzing currencies, because you might want to buy something today and hold it for 3 weeks. I might want to buy something today and hold it for 3 minutes. We could have completely different opinions, and we could both be right. For any of you who have ever been in a marriage or a long-term relationship, it's always just blown my mind that two people can see and hear the exact same thing, and at the end of the conversation have two completely different ideas of what actually happened. Okay, that is just perspective. And so when we get into trading, every question is about the time frame. When people find out I'm a trader, they always say, "Oh, Rob, should I buy Tesla?" Well, that's a silly question, because should you buy it now and hold it for 10 years? Should you buy it now and hold it for 10 days? The answer to that question will completely change the advice that I give somebody. So every single trading system starts here, starts at time frame, and then we build our strategy out from there. Okay, so I'm going to give you a couple seconds here. There was a phone somewhere in this picture. Now look, the first time I saw this, I couldn't find it. I never found it. I finally had to be pointed out, "Hey Rob, this is where it is." And then I looked at it and said, "Oh, okay, I see it now. Very clever, I see it." Now here is the crazy thing. I'm going to go back. You see it immediately now. Forever, from this point on, if you remember this moment and someone shows you this picture, you'll be like, "Oh yeah, there's the phone right there." So it's where you are and where you're looking at it to see what you're seeing. And it's a matter of perspective. So many times in the markets, there are things that are not clear, especially when we're looking in the heat of battle, when we're looking at what's happening right here, right now. Emotions get in the way. We're listening to CNBC. We've got blogs up, whatever it is, and things are very messy. However, if you step back, take a look at the right things, you're going to see what's actually happening. So I always like to think of your trading chart as the place of battle. So if I were to show you this picture and say, okay, what is going on here? It's battle. It's intense. People are swinging sticks and knives and swords at each other. It's very intense. However, if you took a step back, you would say, oh, there's lots of people here and most of them aren't fighting at all. And then if I took a step back here, you'd say, oh, this is just one small tent in a large medieval festival. That's it. It's a matter of time frame. So what time frame you're looking at is so important. So the very first thing that every trader must do when they start trading is choose your trading time frame. Now the trading time frame is going to be the time frame where you make all of your entry, exit, stop, position management decisions. So we need to start off with something. So the question is, what time frame trader are you? Now, as I went through the example earlier, I could look to be buying a currency and only holding it for a day. You could be looking to hold it for a week. We could both lose money very easily. We could both make money very easily. Even though I was short and you were long, that was fine. So we have to start to work on a time frame. So we're going to give some names to trading timeframes. These are just names to categorize things, but it doesn't really mean anything. Someone who is a scalper means that they are very high frequency. Their typical holding period is a matter of minutes to maybe a half hour to an hour. A day trader is someone who gets in and out within a day, so somewhere between 1 to 12 hours. You have a swing trader. This is someone who holds a few days, and then a position trader. Again, all of these are just little labels so we can categorize them. Obviously, this is a gradient from fast to slow. So somewhere in that gradient, you're going to fit. So let's talk about where you fit. The first thing I want you to think about is you. Remember, our trading system is built around you and your personality, what you can and can't do. I am an extreme extrovert. I love action. I love stimulus. I like to be busy all the time. If I made my trading system where I only took 2 trades a month, I would fail immediately because I can't do that. I can't be that disciplined. It's impossible for me to follow that system. So I need to develop a trading system that's more energy, more activity, more trading, more this. I need more, or else I'm not going to be able to follow my rules. On the other side, we have people who are extreme introverts. Again, I don't want to paint introverts as shy people who sit in the corner and don't talk to anyone. That's not what an introvert is. An introvert is someone who needs their energy to be internal. They don't need external stimulus. They like internal stimulus. They're very thoughtful. They're very slow to move. They're very convinced when they finally do move that they're right. Somewhere on the spectrum is where you want to be, and you want to match up your energy level with your trading time frame. So if you're like me, you're more of an extrovert, I would recommend being on the shorter side of time frames. If you're more of an introvert, like to take things slow, then I think you want to be further on the other side of the spectrum. So let's talk about the available time frames that we have. When you go to any charting software, they're going to give you time frames. So they're going to give you something like a 5-minute time frame. So if you choose 5 minutes on that chart, that means that every 5 minutes, a new candle is going to be created. We'll get into candles later, but a candle tells you the open, high, low, and close of that 5-minute period. A 15-minute chart will be a 15-minute candle. So it's going to start off, and then during that 15 minutes, you're going to get a high, low, close, and an open. And then it goes to the next one. 1 hour candles. Every 1 hour you get a candle, 4 hour candles, and 1 day candles. Okay, now look, there are some time frames available in between. There's like a 30-minute, there's like an 8 hour, there's a 1 minute, there's a 2 minute. I get it. Again, this is a gradient. So you need to really look at this and decide, okay, what do I want to start off with my trading time frame? Where do I want to be? Look at those average holding periods and say, okay, what seems like the best one to me that I can follow? Now let's talk about choosing your trading time frame. We talked about your personality. If you are a high energy person, I recommend that you develop a high energy trading system. Why? Because if you try to do a low energy trading system, you're probably not going to be able to follow it and you're probably going to fail. So we want to make sure that this fits us like a glove. Your past trading experience will be a great help. Even if you just got into trading, didn't know what you're doing, and started clicking some buttons. What happens is things that are uncomfortable to you, you stop doing. And things that are comfortable to you, you continue doing. So just your past trading experience will show what trading time frame you're most likely comfortable with. And a lot of people have told me, Rob, I tried short-term trading and I didn't like it. Well, great. Then don't ever try it again. Don't ever try it again, because if you didn't like it, it means that it didn't fit your personality correctly. And also your personal lifestyle. Now, this is something we've got to have a frank talk about, because all of us have a life outside trading, and all of us should have a life outside of trading. And there's things that are more important than trading. Absolutely. And there's things that take precedence over trading. There's many times where there would be good trade setups. Like, for example, on a Monday night, the Reserve Bank of Australia was about to announce interest rates. And I think there's going to be a big move and I could make a couple $1,000s. But my daughter has a recital to go to. I go to the recital. So you have to look at your personal life. Is there a time during the day where it would be very difficult to stay focused? Do you have like a job that's just super intense? And from 5 p.m. to 12 p.m., you are just swamped. You need to then build your trading time frame around that lifestyle. Now, if you're like me, that can be more free-flowing, be behind systems much of the day, it's easier. But if you have a lifestyle where you say, hey, look, I've got to get kids off to work in the morning, I've got this at noon, you may need to be a shorter-term trader during the times that you are available. Or you might need to adjust your position management, saying, hey, I don't want to be a short-term trader. I can't be sitting there watching it all the time because my life just doesn't allow it. So think about your personality traits, think about your past trading experience, and think about your life. When is it conducive for you to be a trader? Now look, you might just have to pick a trading time frame, and if it doesn't work for you, you just change it. But your trading time frame refers to the chart time frame you're going to make all of your decisions. You're going to make your entry decisions, your stop decisions, your exit decisions. Everything is going to be made on this time frame, so it's very, very important. Let's go through an example here of a 1 hour time frame. So a trader decides, I'm going to trade on the 1 hour time frame. So if you can see here, we have the 1 hour chart right here. 1 hour chart. And so every single one of these candles is equal to 1 hour. Now we're going to make all of our decisions. We're going to look at setups. We're going to look at support and resistance points. We're going to take a look at where we're going to get in, where we're going to get out if we're wrong, and where are we going to get out if we're right. So the actual trading decisions are going to happen on your trading time frame. However, just like that picture I showed you of those knights or wannabe knights fighting, you don't see all the picture. When you're in the fight, when you're looking at that shorter term time frame, you don't see the whole picture. So what we're going to have you do is we're going to have you analyze at least 2 time frames above your trading time frame. Now, one measure above your trading time frame, and we'll go through what that is called your velocity time frame. So velocity means, hey, it's moving enough for you to get into it. We have a concept here at Maverick called energy. Things have to have energy. When you're trading currencies and it's not moving, it's a bad time to trade currencies. Currency trading is a game where you have to be on the sidelines more than you're in the game. You just have to be. You've got to be waiting patiently for your moment, take your shot, get your gain or your loss, and then go back to cash. We're going to take a velocity is going to be +1, and your trend time frame is going to be +2. So for example, let's say a trader says, I'm going to trade off the 1 hour time frame. If that's the case, then they can just forget about those, and they're going to be looking at a 1 hour chart, a 4 hour chart, and a 1 day chart. Now again, there is an 8 hour chart. If the trader says, I want to look like a 1 hour, 4 hour, 8 hour chart, that's fine. But again, we have to have a velocity and a trend chart. If a 15-minute trader says, hey, you know what? I'm going to trade on the 15-minute time frame. Well, great. We're going to be looking at 3 charts. The 15-minute chart is going to be where all the actual trading decisions are made. The 1 hour chart is the velocity chart. The 4 hour chart is the trend chart. The most optimal trade that you can make in the markets is when you have all 3 going one way. So your trend is bullish, your velocity is bullish, and your 15-minute short-term chart, it is a bullish setup. This is where you're going to get the best trades. On the short side, you want to see the longer-term trend chart is in a downtrend. The velocity is in a downtrend, getting stronger. And your trading time frame is in a downtrend falling, and you get into the right setup. These are the trades you're looking for. What you're not looking for is this, where your trend time frame is bearish, your trading time frame is bearish, but your velocity time frame says, hey, for the moment, it's having a little bounce. For the moment, it's not going in your favor on the velocity time frame. You need to wait. You need to wait until that turns around. Once that turns around, there could be a great setup, but this is not an optimal trade setup. Now let's first talk about the trending time frame. So this is going to be 2 time frames above your trading time frame. I put this image here of a traffic jam. This is exactly what this is about. When you look back, when you get a bird's eye view and you look at a longer term chart, you get to see, okay, where's the general flow of traffic going? Where are the traffic jams? Where does the traffic end? And then what are the threats? So if you're driving in your car and you're somewhere around here, you may not see that there is a wide open space up here because of the traffic jam. Again, if you're in this car back here, you're thinking the traffic jam lasts forever. But now you know you don't want to turn here. You could go hit this way is open, straight is open. So again, the big trend tells you, okay, this is the way the direction is flowing in traffic, and these are the major points that I need to be aware of. When we look at your velocity chart, +1, this is where we're going to use it to say, okay, velocity, is it moving enough? This is different than trend. Trend is it moving up? Velocity, is it moving enough at a rate of speed that makes it worth putting our money at risk? Is there momentum? Is there velocity? And then where are the pivot points? If we're looking at it and it's got good velocity, but it's heading into a pivot point, we're going to wait. We're going to wait for that until we get a better velocity score. Now, the really cool thing is the software is so much better than when I started trading. When I started trading in the mid-90s, the software trading systems were terrible. They were amazing at the time because no one had ever seen anything like them, but they were terrible. Now you can do so many cool things. So you can put all of these charts on your screen, and we highly advise that's exactly what you do. So here is a chart, and you're just one monitor. If you have two monitors, you can make this even better. But on one monitor, I've got all three. I've got a 4-hour chart, I've got a 15-minute chart, and I've got a 1-hour chart. So if I'm looking at my 15-minute chart, I say, wow, this thing's really took off. It's got a lot of velocity. My 1-hour chart is saying, oh my gosh, this thing's got a lot of speed. My 4-hour chart is saying, hold on. We are running right into an area of traffic, of resistance. And if you don't know support and resistance, we'll talk about these terms. We're running right into a place where we will expect there to be some resistance. So this is telling you the 15-minute chart said, go ahead. 1-hour chart said, go ahead. The 4-hour chart said, hold on. You've got to wait. You've got to wait for that traffic jam. By following this, there's a lot of trades that you would have taken on your trading time frame that you never take because the big picture, the bird's eye view said, whoa, you need to wait. You need to wait another couple hours for this to pull back, gather steam, and then break out and go. Then it will be a good trade. But until then, it's not a good trade. So again, it's awesome. You just put all these three charts together and you read all three. Again, the first one's going to be your trend chart. The next one is going to be your velocity chart. And your lowest time frame is going to be your trading time frame. Your first job as a trader is to choose your trade time frame. If you don't know what to pick, choose one. I gave you some examples. I gave you some guidance on your personality, your past trading experience, and your personal life. Choose something that works within there. And then if it doesn't work, choose a different time frame. And then you simply need to make a change on your charts, and you're going to try that one. And if that doesn't work, you're going to choose a new time frame again, and eventually you're going to land exactly where you want to be. You are going to analyze two charts above your trading time frame. +1 chart time frame is going to be velocity, and +2 is going to be trend. We get into this substantially in the relative strength sessions, where we go through this and you actually will build your scoring system. And last, your best trades that you make, and I promise you this, the best trades you make are when all three are in unison. When all three elevators are going up and you go long, it's great. When all three are going down and you go short, this is what you're looking for. You're looking for those setups to where everything is going in your way. We know that sometimes things will reverse. That happens. That's trading. But if you put yourself constantly in the area where the daily 4-hour, 1-hour chart is moving lower and you go short, more times than not, you're going to be on the right side. Thanks for joining me in this session. We'll see you in the next.